Good Monday afternoon, everybody. Welcome to Market Minds. No, I am not down on the floor today. I am actually out in California, but still had to bring our presentation live to you. Let me know if everybody can hear me, can see me okay, because I'm on a new setup today. So hopefully this is all working. Guillermo, thank you very, very much. Hope you all had a great weekend. Not sure if you tuned into that fight on Friday night with the Netflix debacle. I can't believe Netflix is actually up. What is it up now? 2.5%, $19. After that debacle, boy, they better fix that before they broadcast the NFL games on Christmas. Guillermo, thank you very, very much. What's the market doing? Rates are steady today. The market was a little bit lower early on, and now we've rallied and kind of at highs of the day here. We're up 26 points or so in the S&Ps. Tesla just won't stop. And the order flow in Tesla today, early this morning, was incredibly bullish. And then about an hour ago, some big call sellers came in. Maybe they were just taking some profits off of the table. So far today, though, we have almost 2 million contracts. Almost 2 million let me pull this up here. Let's see. Yeah, 1.8 million contracts so far in Tesla. We get about 2 million on an average day. So incredibly busy. About, as you can see here, about 2.5 to 1 or so call versus put volume. Is this stock going to keep going? Who knows? There was news this morning about the government and last Friday there was news that they might take away EV credits. And this morning there was some real positive news about self-driving. So helping Tesla, stocks like Uber, Lyft getting kind of nailed today, to be quite honest with you. But we'll see where we go from here. And the rest of the marketplace, it's up. Tech struggling a little bit. Nvidia, which is the big one everybody's going to be watching this week because they have earnings later in the week. Nvidia is actually down almost 2%, down about $2.50 here. They have earnings on Wednesday after the close. So goes Nvidia. So might go this market, guys. Apple recovered really nicely today. It hit down at the 20-day moving average, recovered real nicely, but everybody's waiting on Nvidia, and we'll see what the bets are like later in the week. Now, I want to get into the topic of the day here. And the topic of the day, guys, is gold, right? We've seen, and what I have right up here on this chart, and I'm going to show you other charts in a moment here. This is the gold ETF, GLD. And you can see, boy, oh boy, just, almost a straight shot higher. And then since the election, boy, we have sold off quite a bit since the election. And in fact, let me bring this up here. Here we go, because we are going to present Drew Urasek. I'm going to bring in here in a second here, our expert on gold, to talk about it. But why did we see that big rally? Why did we see the big sell-off since the election? In fact, it's the biggest sell-off we've seen in gold since, I think, 1980, since post-election. Is it central bank buying? And then we're going to go into gold versus Bitcoin. All right, Drew, you're the man. This is
Thanks
Drew
for having me,
Urasek,
Scott.
everyone. I think you guys have seen Drew on the show before. Drew is our gold guru, our gold expert, and he is going to tell us everything we want to know about gold. What is going on with the trends here? Why we saw the big rally over the last 9-12 months or so, what this dip is all about, and where we go from here. Drew, what say you?
Hey, Scott, thank you for having me today. Happy belated Veterans Day to all those that
Yes.
served our country. I know, Scott, you've got some employees besides that you know by myself, besides myself, that are celebrating or have celebrated Veterans Day. Thank you for your service, everybody. To all my Marine brothers out there, happy birthday last week. So Scott, gold has absolutely been on this trajectory that I haven't seen since I've been in gold. And I got into gold myself personally in 2010. And that
And while
pullback,
you're not to interrupt, while you're talking though, I'm putting this chart up on the screen here. This is a 1 year chart. Then I'm going to switch to a 3 year chart, but you can go right ahead.
yeah, so that market, skyrocketed for gold since the beginning of the year is not normal. Just everyone should know gold normally does about 9.5% a year traditionally. So the whole year has been kind of crazy. But this pullback, in my opinion, is very healthy. And it actually reminds me of 2016 when President Trump was elected the first time. Gold was up almost 30% in 2016. Started out about $1,000 an ounce, went all the way up to almost $1,400 an ounce, and had a pullback at the end of the year. Again, markets were very optimistic about a new president coming in. Everything's great. What people don't realize, or probably don't realize, is something that drives gold is our debt. And our debt went up 38% with President Trump during his first term. Well, guess what? It's almost guaranteed he's going to spend more money this term. Guess how much gold went up during his term, by the way?
And before
38.
you say that, hang on, before you say that, I want to really make this point clear. This conversation today is not in any way, shape, or form political. It is not an indictment of President-elect Trump or his administration. These are the cold, hard facts. Okay,
Oh,
so
yeah.
nobody take it as that this is any sort of political opinion here. It is not. All right, go ahead.
By no means, by no means. We're money people. We're not
That's
politicians,
right.
right?
We're agnostic, right? You just got to make money.
We are politically agnostic. Great point. But what's really amazing about gold is that it's an insulator against our debt. So the debt went up 38% during his term, Trump's first term. Guess how much gold went up during that same time period? 38%. So gold is acting exactly, eerily, exactly as it did back in 2016. Ended up still up for the year, did pull back before the end of the year. Guess what's happening right now, right? We're having that little bit of pullback. It's doing some recovery today, but long term, I love gold. It's my personal opinion, of course, but because it's insulated against the debt, which we know is more than likely going to go up and go up significantly.
Yeah, no question. In fact, I talk about this a lot on the networks, and I was on Schwab Network this morning talking the exact same thing. In my opinion, it is a buy the dip scenario, as it has been for the last 6 or 9 months. This dip happens to be a lot more severe than some of the ones that we have seen, but there's also a lot going on, not least of which this incredible rally in the dollar, about 6% or so over the last several months. That's kind of coincided a little bit with this pullback in gold. But, going back to the charts here, if we look at this chart here, everybody, okay, this is the 1 year chart. And on here, the green line down at the bottom, that's the 200-day moving average. We are way away. We are far away from that. We've broken through both the 20 and the 100-day moving averages. But this area right in here where we are right now, right around the 25-ish or so, if you will, that was former resistance. And that is probably putting in an area that we're seeing the dip buyers coming in right now. And this is just the beginning. And like I started saying at the beginning here, this is the biggest post-election drop in gold that we've seen since 1980. So if this follows the path, like Drew was saying, back in 2016 when President Trump took office, who knows what's going to happen. Sandip, we'll talk about that in a second here. Is gold negatively related to Bitcoin? We'll talk about that in a moment here. Let's go back to the charts here, though, because here now is a 3-year chart, and obviously it follows the same ascent as a 1-year chart, not quite as severe because most, big chunk of these gains have been this year, where we've seen gold go from 2100 topping out at 28 now, pulled back a little bit from there. But again, this area that we're kind of sitting in there right above 2500, that was big time previous resistance. We know what happens when we see previous resistance or previous support. That can mean that that is now the opposite of that. So that previous resistance could be support now. Drew, what do you make of that?
Well, absolutely. We want to look at these buying opportunities like you're defining right now. And as long as, and this is our personal opinion, our company's professional opinion, as long as you have a 5 to 7 year time horizon, we always find you'll be very happy with gold because, again, it insulates against so many market factors that could affect the rest of your portfolio negatively, right? And we, by the way, sell real gold. We're talking the stuff you can actually hold in your hands, coins and bars.
Absolutely. And people look to gold historically as the safe haven asset. What happens if we go off the dollar and we go back, the gold standard and all that stuff? So people like to have physical assets. Now, do they want to have it at $2,600 an ounce? Do they want to have it at $1,000 an ounce? Is it going to 5,000, 10,000? You're not going to see, and so Sandip, you just asked, what's the correlation with Bitcoin? We're going to talk about that. You're not going to see the dramatic swings in gold like you do in Bitcoin, but you got to remember you're talking about a $2,500 asset versus now a $90,000 asset. Okay. You also see Bitcoin is able to trade round the clock, 24/7, and there's a lot more interest in the day trading, if you will, and just short-term trading rather than in gold. What you see in gold, you don't see a lot of people day trading gold or in and out. Like Drew said, you really should and could have a longer time horizon on that. So Drew, what do you think? And I have a chart up right here. What do you think gold versus Bitcoin? Are they inversely correlated? Can they work together? Where does the similarities and differences, where do they come in?
Great questions. And I own, by the way, I have to preface this. I've made money on Bitcoin. I still have Bitcoin. So I am not a Bitcoin hater, but Bitcoin trades like a tech stock. All you have to do is look at the NASDAQ. If the NASDAQ has a bad day, Bitcoin tends to have a bad day. Gold is a risk off investment. So it's not going to obviously trade like Bitcoin. Now we have an all up market today, right? Everything's up today, but Bitcoin tends to follow that risk on investor or that risk on strategy. So it doesn't trade the same. It does have some insulation against inflation because they're not making it anymore, right? It's not tied to our debt. It's not tied to the fiat currency that we use as a country. But overall, I would say Bitcoin is more of a tech stock or trades more like a tech stock, at least for now.
Well, there's also a finite amount of Bitcoin, right? So there's what, 21, whatever it is, 21 million, and we're getting closer and closer to that end game. So you talk about, excuse me, the pure principle of pure economic principle of supply and demand, and at some point, probably sooner rather than later, I think in the next, I don't know if it's 4 more halvenings or whatever it is, Bitcoin supply is going to be gone. So you see lots of countries, not central banks, but lots of countries stocking up on Bitcoin. There's all this talk about the U.S. You possibly having a Bitcoin reserve. I doubt that's going to happen. That's my personal opinion. But that leads me into the conversation or the topic of central bank buying in gold, because that is something that has happened and happened in a big way over the last year.
Yeah, one more comment on Bitcoin too. Bitcoin is also another electronic asset, right? So some people like to have a physical offset when it comes to risk as well. And that's really my final statement on Bitcoin. But as far as central banks go, central banks bought 2,000 tons of gold in the last 2 years. Never in their history have they bought that much gold ever. So they obviously see something coming down the pipe. Now you have a lot of speculation as to really why. But at the end of the day, our country just hit $36 trillion in debt. Just happened on Friday. $36 trillion in debt. And we are actually in better position than most countries when it comes to financial health. But because the entire world market is so riddled with debt, central banks are realizing, you know what, I need some security, I need some financial stability. So they're actually getting more gold.
So that could be some of the reason why we've seen this big ascent in the price of gold. Because again, what happens, guys, when supply and demand get out of balance, right? And we see prices go higher when there's big demand. We see prices come down, like in oil right now, when there's excess supply. Let me switch over for a moment here. Here we go, guys. Word of the day today, get in for the spin the wheel later on, is bullion. Yes, not an easy one to spell, but go ahead and just put that in the chat there. Even if you misspell it, it's okay. You can get it in there. I didn't want to just use gold, but bullion is the word of the day here. Does anybody have any questions for Drew outside of just correlation of Bitcoin and gold? Any questions about the sustainability, or what happens if I get in now and gold drops 10%, right? Again, I think that's why Drew mentioned you got to have this 5 to 7 year time horizon, right? It's not gold is not a play or an asset class that the millennials are probably going to buy right now, because millennials are looking for instant return. We know that, right? Instant gratification. But, you know, should you have this as part of your portfolio long term? In my opinion, you should. I think in Drew's opinion, you should. My guess is if you talk to your own investment advisor, they will probably say it's not a bad idea whatsoever. We do have a question here, Drew. Do you recommend physical versus owning like the GLD ETF?
Great question. My personal opinion is yes, you definitely want to have a physical offsetting asset. GLD is a digitally held asset. You also have counterparty risk when you buy GLD. When you have the physical asset, you don't have that. So, in my personal opinion, yes, you should have some physical gold. Also, physical gold is not taxed the same as paper assets. Pretty cool thing that a lot of people don't know.
So that's a great point. What's the difference, if you can go into it real briefly without getting into too far into the weeds?
I think you're going to be plugging my webinar. I go into exact detail on this in my webinar. I have to say, I'm not your accountant. I'm not your
Yep.
lawyer. I'm not trying to tell you how to do your taxes or how to interact with U.S. government or any government agency. But gold, physical gold, especially physical gold inside your retirement account, the IRS is always going to record it at spot price. Now, spot price is the futures contract traded on the trading floor between futures traders. It is not the price of gold that would be in your vault, all right, in your retirement account, the physical coins, because the futures contract is the raw ore out of the ground, has not been taken delivery of, has not been melted down, impurities taken out and stamped into a coin or a bar. So the IRS is looking at the futures contract price when assessing the value of taxes, and not the value of the actual coin or bar that's in the vault in your IRA, which could be 25% different. Pretty cool. Pretty
That
cool, in my opinion.
much? Holy cow.
As much as, yep, as much
I didn't
as,
know
yep.
that. Wow, wow, wow. Again, we are not investment advisors. We are not your financial advisors. Make sure you speak to someone about that if you are interested in that. Let me go back here real quick. If anybody has not seen this yet, the word of the day is bullion. Please put that up there. Drew, another question for you. How does gold compare with other precious metals like silver?
Silver has had a great question. Gold's typical return every year since 2000 has been like 9.5%. So very kind of trustworthy. You can kind of set your watch by it. Silver has had a little bit of a
More
crazy
volatility,
past.
right? Yeah.
Yeah, I remember when I first got into silver, it jumped all the way up to like 50, 60, over $50 an ounce, and then dropped the next year down to 16, $17 an ounce. I will say this based on, I put an article in my LinkedIn page at the beginning of the year. A lot of analysts are saying that silver, based on price, could go up very significantly and relatively fast because of supply, because of demand, and to be quite honest, a lot of mining companies with stricter and stricter environmental guidelines can't, just dig freely, right? So the demand on silver could go up significantly just because less companies are mining. There's more restrictions, environmental restrictions, and the demand is going up. So silver could have a huge upside based on where it's at right now, which is relatively cheap.
And I think you also, if you look at, and there's a very widely followed comparison. It's called the gold silver ratio. Historically, historically that ratio has been somewhere in the range of 50 to 60 to 1, meaning gold is typically 50 or 60 times as expensive as silver is. Now, with this massive push up in gold, we are seeing that upwards of like 90 to 1 or so. Historically, if you follow that, if you trade off of that, what that would tell you is that over time, the price of silver should do better than the price of gold as that ratio comes back down and compresses to that historical average. But is that time frame 6 months, a year, 5 years? We don't know that. So, is the upside, where is the upside in the comparison of the two? You can make that decision on your own. Silver is used in a lot of materials that we use all the time. Silver is a very big industrial metal, and gold is gold, right? Gold is gold. Got a question here. Is it better to buy rare gold coins over bars?
Great question. If you're talking about yourself personally, that's really depending on the market you get into. There are some coins that garner huge premiums, but we deal in investment grade precious metals. What does that mean? It means the government allows it inside your retirement account. It's only the top quality coins and bars from a sovereign mint, from a government mint. And those coins are not what's called numismatic coins. So those rare coins, the
How do you
reason
spell
why the
that?
government yeah, bullion. Let me spell bullion for you.
Yeah,
So
exactly.
numismatic coins tend to be, rare coins, one-off coins that aren't produced anymore, and they need to be graded. So now you have a smaller audience of people that can buy it. So we don't deal in that. We want to have the top grade investment quality coins and bars that we know there's a market for that you can not only get into but get out of very easily. So the answer is on our side, we only deal in investment grade, not numismatic.
God, great. Keep the questions coming here. This is great, guys. Going back to the charts here, this is GLD. Similar pattern to what you saw for the gold charts, obviously. Similar pattern to what you're seeing in silver as well. And if you look at this right here, and this is a 1 year chart, what we have up on the screen, you can see basically every dip was a buying opportunity. This dip here, yes, it is more severe than we have seen. But just like we were looking at those charts in gold where we saw 2500 in the past, or 2500-ish being resistance, now possibly acting as support, we have that same area of resistance here in GLD, past resistance, that we're kind of bouncing off of that right now using as support. So we'll see if that holds here. Personally, for me, I would like to see GLD capture that 50-day moving average again, which is right around 244 and a half or so. It's at 241 right now. And if it did, that's when I would probably dip my toes back into that buy the dip mode. But that's, looking at a trade again. I'm not looking at GLD as something I'm going to hold for 5 to 7 years, where gold I would potentially hold for 5 to 7 years.
Yeah, I got in your GLD trade this time last year.
That was a good one.
It was a great one.
Maybe I wish we would have used a little bit longer term expiration, but that's we're not holding it. It's just a trade. So that is a good one here. Guys, this is going to be a last call for the wheel here. Okay, bullion, last call for the wheel. Make sure you get that up here so we don't forget anybody. And I know we have several of our listeners, several of our students who have spoken with Drew and had talked to him about long-term investing and buying into gold. But if you want to learn more about that, Drew, you are hosting a short webinar on Wednesday, if I'm not mistaken, right?
Wednesday, 7 p.m. I think they're going to post the link in your chat, or at least the information. But Wednesday, 7 p.m., we're going to go over how to own gold in your retirement account, all the features, benefits, and tax differences in detail.
Awesome. And guys, it definitely be worth your while popping in there. It's not going to be, it's not a 2 or 3 hour webinar. It's Drew's just going to give you the facts, what you need to know. All right. I think we are closed for the wheel. Are we closed, Mike Clark, or do we still need to get 1 or 2 more minutes in here? Last chance, guys. Last chance. And yes, as we posted up here, make sure we stay till the end to claim your swag. Tomorrow, everybody, I will be traveling. Charlie Moon, yes, your favorite goat, Charlie Moon will be hosting Market Minds tomorrow. So get ready to give him a rapid fire, because we know when Charlie's here, he loves to go through those charts. He loves to take on your questions and analyze those charts really, really quickly. So tomorrow you will get Charlie and rapid fire. Looks to me like we are closed on the wheel. So let me get our wheel here, Mike Clark, if we can get that posted up here. I think I got it somewhere. I am working on my laptop, guys, today, so I am really, really slow on the trigger today. What does this say? Mention correlation with gold and the debt. Are there other factors, war, etc., or do those tend to be short-term spikes and troughs? You know what? I'll throw that to Drew to answer that. Outside of the correlation with debt, what other, it's a safe haven asset, bottom line, right? So what does that mean?
So if you look at any of the recent wars that flared up, gold went up during those periods. Any time of uncertainty, gold tends to be that safe haven asset that people flock to. So there's the big correlations, long-term correlations are our debt, right? Insolvency is a possible insolvency as a country. And then again, anytime the market goes down, every time there's a big dip, the biggest one, obviously, most recent being 2008, gold did the absolute inverse of our stock market as it crashed. So gold typically will be that safe haven for uncertain times. If the market's scared, people want gold.
Yeah, again, it's tried and true. It's tested. It's, I wouldn't say it's like people rushing to buy VIX calls or anything when the market is in a downward swing, but there's definitely that direct correlation. All right, Drew, thank you, buddy. Really, really appreciate you being here. Anybody interested, make sure you tune in to Drew on Wednesday night. We are going to go to the wheel. We're pretty filled up today. This is good for a Monday. This is fantastic. Let's get the wheel going. It is closed. Andre, you might be too late. If you're just putting that up there now, I think you are too late for today. There's a spin, guys. There is a spin. Who are we going to see today? Is it Gene Merritt or is it Robert DeBoer? It is Robert DeBoer. Are you here? The wittiest student we have. That's what I'm going to call Robert. He is the wittiest student we have. I think he's come up with our flying buzzard condor position. He always tells us at the opening bell and the closing bell, Robert is here. Excellent. We have our winner today. Robert, make sure you email us at prosperswag@prospertrading.com. Send me your address, your size. We'll get it out to you. Yeah, Gene Merritt, you were a tick or two away. You were a fingertip away, just like the Bears were from winning that game yesterday. Another crushing defeat, especially to the Packers. Oh my God. That was brutal. That was brutal. But such is our season. All right. Don't forget to tune in tomorrow, guys. Charlie Moon here to answer all your questions. Go through a rapid fire. Appreciate everybody. Happy Monday, everybody. We'll see you soon.